Hello and welcome. Today we have got a special guest in the office, Jaspreet Singh, who is a chartered certified accountant at JSK. We have been getting a lot of questions from our landlords and vendors around tax changes, so we thought it would be really helpful to bring in an expert to walk us through it all. So today we are going to be talking about making tax digital for income tax, which is coming into effect very soon.
Thank you for having me, Kristina. It's really great to be here. At JSK, we work with a number of landlords, property investors, including overseas clients. So I'm really looking forward to sharing some practical insights that will hopefully make things clearer from tax perspective.
What exactly is making tax digital and why is it being introduced for landlords?
So making tax digital, the short name MTD, it is introduced by HMRC because they want to update their IT systems. So when they thought they must make a big overhaul to their IT systems and have a improved system where things can be recorded digitally. It's obviously going to reduce the errors, improve compliance. And they want all quarterly reportings. So that's the main objective of HMRC.
So Jaspreet, who will be affected by these changes and how do income thresholds work?
So MTD applies to landlords and sole traders. I know majority of your clients, so all of your clients are landlords. I'm gonna just stick to the landlords here. Every landlord in the UK who holds a rental property, they will be affected. So the threshold is 50,000 and it is based on your last year's tax return, tax year 24-25. If you reported 50,000 as your gross rental takings, not the rental profits, then MTD applies to you. So subsequently, the thresholds will reduce from April 6th, 2026, the threshold is 50,000. However, next year is going to reduce to 30,000 and the following year it will reduce to 20,000. So sooner or later, every landlord will fall into this new regime and you have to comply with MTD. So better start preparing now.
So, okay, if you say it's better to prepare now, so what should landlords be doing now to get ready ahead of April 2026?
Yeah, good question. That means moving away from spreadsheets and manual records. If you haven't already, ensuring your records are complete and speaking to your accountant about suitable software. The earlier you transition, the smoother it will be, so that you're prepared mentally, what's going to be happening. It's best you start preparing now, move away from all your manual records, start taking photos of your receipts, start saving them digitally on cloud somewhere, because you have to upload this onto the software when you will be reporting your quarterly updates.
So what landlords need to do differently on a day-to-day basis, especially when it comes to digital records and quarterly reporting?
I mean, the biggest shift is from annual reporting to ongoing compliance. Landlords will need to maintain digital records throughout the year and submit quarterly updates, followed by final year-end declaration. So it becomes a continuous process rather than once in a year exercise. So that's the big change, yeah.
In terms of the software, what landlords will need to use and how they choose the right one?
I mean, yeah, there are plenty of softwares out there in the market, Xero, QuickBooks, Free Agent, Dext, and there are many more actually. Some of the banks also have this facility where you can actually attach receipts to your bank transactions, like Anna, I know. But really and truly, it depends on your portfolio. How big is your portfolio? What sort of transactions you're having? Number of transactions. So yeah, you must speak with an accountant. They can help you choose the best software, because at the end of the day, you obviously have to look at the costs. There are softwares which can be expensive, and there are softwares which are cheaper and effective. So an accountant can actually help you, but there are plenty of softwares in the market.
I would say for smaller portfolio landlords, perhaps those who have one or two properties or three, ideally it's easier just to use the accounting services rather than try to do it yourself.
Yeah, that's right. I mean, in my opinion, it's always best to seek professional advice. I mean, we come across many clients or potential clients who actually call us and say, oh, this is easy, we can do it. But then they end up messing things, and then they come back to us saying, oh, can you sort this out? So again, the thing is, when it comes to properties or any sort of business, you should seek professional advice, because, that guidance will help you save costs eventually. Yeah.
Are there any common mistakes landlords make when moving from manual records to digital systems?
Yeah, so the common mistakes, I would say, is the poor record keeping. Also, mixing your personal expenses with your business expenses, very, very common. Again, leaving things to last minute, not meeting deadlines. One of the important things which I must say, not responding to your accountant. So you must, when the accountant requests the information, you must basically provide that information. Also, keeping all the records, such as your mortgage statements, rental statements, letting agent statements, so all those things, you must keep. And we come across plenty of landlords who actually do not keep these records, and last minute they're just scratching their head and giving us estimates. So that is not the right thing to do.
Now, and specifically for our overseas landlords, who is exempt from making tax digital, and how does it work in practice?
So MTD actually applies to every single landlord, depending on their thresholds actually. So just being a non-resident landlord does not mean that you are exempt from MTD. You still have to comply with MTD. However, if you do not have a NI number, a national insurance number, then you are automatically exempt from MTD. This is according to HMRC's guidance as of today. This can change. But yeah, if you do not have NI number, you do not fall into the regime of MTD.
If NI number was issued before to you when you were a resident in UK, but you're no longer in UK, how will that affect you as an overseas landlord? Let's say you haven't been living in UK for the last 5 years, but you have a historic national insurance number.
So yeah, as long as you have national insurance number, you have to comply with MTD. It doesn't matter whether it was issued 5 years ago and you haven't been living in the country. The fact that you have property in the UK and there is a income arising in the UK from the property, you will have to comply with MTD.
And finally, with quarterly reporting in place, what is the role of the annual self-assessment, and do you think landlords will need more support from accountants going forward?
Yeah, absolutely. I mean, as I said, the landlords will definitely need support from accountants. So, this quarterly reporting does not replace the annual reporting. You still have to do your annual tax return. So these quarterly updates basically, gets clubbed at the end of the year, as well as, if the landlord has employment income or any other taxable income, that also gets reported onto your annual self-assessment. And, that will obviously change your tax rates depending on the level of income you're going to be generating from the property, as well as any other sources of income. Yeah. So the annual self-assessment will still stay in place.
Thank you very much, Jaspreet, for joining us today. That was a really clear overview of making tax digital for landlords. And this is just the start. We'll be covering more landlord tax topics in upcoming episodes, so stay tuned for the next part of our series.